right, a lot going on in the stock market, and so let's get right into it. We're going to talk about three things. First thing is the longer term momentum. We're going to look at that, and then we're going to dissect it a little bit further, get into the weekly price action, and then finally I want to show y'all an asset class that has really started to take off lately. Been in a multi-year trading range. It's broken out to the upside. It looks like it's towards the beginning of the move, so I want to show that to you, something to keep an eye on. So first things first, we look at the longer term momentum, and this is important because it gives us some guidance on how risk averse we want to be or how risky. So we're looking at the 12-month momentum of the S&P 500, the All World ex-USA Index versus shorter term treasuries. Last month it finished positive for the month according to as far as the S&P 500. All World ex-USA Index has been negative for a long time, but the S&P 500 has been positive. So this month it looks, if it holds right here, it will close negative, which will be a big warning for a bear market. And here's a look at the weekly chart of the S&P 500. And so you can see a few weeks ago we had a big move down in the S&P 500 right off of the highs after a pretty good bull bar, and we've got this strong bear bar to the downside. And then the week before this past week, we did have a bull bar, and you can see that they were pretty aggressive buying here, making this long wick down on the bottom. But this week the bulls could just not. They just couldn't. They didn't have enough juice to get to the upside of it, so they couldn't close it. Bearish week for the S&P 500. So this right here, this bull candle, that was the buy signal. We could not get the trigger. So no trigger, no action. Right here we've got support down at this level, and it's pretty wide area of support simply because you can see where market bounced right here, we bounced right here. You can see every time the S&P 500 in the past has gotten in this area, it's exploded basically in one direction or the other. So that's an area to really watch the S&P 500 when it gets close to there. And the second thing is if you take and measure the distance between the high right here, really when this bull leg started, 50% range is pretty close to in here too. So that's a range to look at. And then there we've got some other support areas down at 2625 level, 2350. Really what this is telling us is that the S&P 500 is weakening. It is getting weaker. We're in the second pullback. I wouldn't be surprised at all if we saw another leg to the downside here. An asset class that has become pretty exciting lately is gold. Gold has been in a multi-year trading range, and it has just broken to a relative new high. So look, markets from a real high level, they only go in three directions. They either go up, they go down, or they go sideways. Another way to say it is there's three stages. So for the past 5 years or longer, depending upon, you could start to count earlier, but for at least the last 5 years, gold has gone sideways. It hasn't made much movement in one direction or the other, but it has just broken to a new high. So it could have just started the new stage to a big bull run. So we'll see if it continues, but look at this chart of gold, you'll see exactly what I'm talking about. Now look at the green line. The green line, you can see where there's been sell-offs, and then each time that low has gotten higher. And then at the top, it's gotten to the top, and then there's a sell-off, 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 and then but each time it's pulled back, the bulls have become more aggressive at a higher price. That in itself is called an ascending triangle, and it's bullish price action. So look, we'll see if it can continue, if we can test the new highs test those old highs on gold, or we'll go from here. But overall, the price action looks pretty bullish on gold right here. All right, in closing, S&P 500, the monthly momentum continues to slow. If we see a close below treasuries at the end of this month, it's going to be a big warning sign for all the bulls. So we'll see if the momentum can continue to be positive, to remain positive on a monthly basis, but right now it's not looking too good. On the weekly time frame, easily see another leg down. It's really been in this sideways trading range you can see from the chart earlier, and we'll see if it can break to the upside, break out of the trading range one way or direction or the other, but again, even on that time frame, wouldn't be surprised at all if we did see some downward price action, another leg to the downside. And then gold looks really bullish on the longer term, especially on the, again, especially on the monthly chart, the longer term chart. Gold does look pretty bullish here, breaking out of that ascending triangle. So, hey, look, if there's a market that you want to look at, shoot me an email. I'll put my email down below or write a comment in there. So, all right, we'll talk to you next time.